Hello, everybody, and welcome to this conversation with Guillaume. Hello, Guillaume.
Hi, Christophe. Hi to all your subscribers. I'm pleased to be here.
We are here for a conversation about stock picking, how to find good quality stocks, how to outperform the market, and how do you invest in this new environment now that stocks are at all-time highs, now that we will enter in a new market environment with lower interest rates. How do you perform? We have the AI trend that is booming. And I want to start this first topic with Oracle, the latest update we had with a huge backlog, because Guillaume had a great video about it. And Oracle is a company we don't follow on this channel. So please, Guillaume, enlighten us about your analysis about Oracle.
Okay, yeah, first I need to do a little disclaimer on it. I didn't deep dive fully on the company. I just did some first basic research about it. And I think as everybody knows that they had like this $456 billion backlog for the next years. And the stock took like what, 45%, 50% in a day or something like this. Which is pretty huge for companies this size. Like we're not talking about a penny stock or about a biopharm, a biotech companies that just find a new molecule. Like we're talking about a company that was already close to $1 trillion. So
yeah,
it's huge. Yeah, there is few concern about this backlog. Obviously, the first one, I don't know if some of you like check the 10Q of the company about those backlogs. But it's like they expect 10% of it being paid in the next 1 or 2 years, then 20% of it in the next 4 or 5 years, 30% of it in the next 6 or 7 years, and the rest in undetermined time. So it's really diluted over time. Like it's not a backlog that will be there in 5 years. So this first, it reduces. I'm not saying like it will not create growth for the company, but it will reduce the cumulative annual growth rate that people seem to expect from the company. The second thing is, apparently, I don't know to which point is true, but I think it was in the Wall Street Journal. So I hope they share a good information. But 300 billion of this backlog was from OpenAI. So you already have more than half of it coming from a company which is nowadays not profitable, which from some research seems that it would be profitable in a year or two. So it's close to profitability, but not close to profitability to the point to have 300 billion to invest. So it means that they will need to dilute again shareholders and create a new investment because they cannot. I don't know if OpenAI can go public, but I think the structure makes it that it's difficult for them to go public, or at least for now, except if they change completely the thing. So they will need to find new investors, and finding those new investors that will be able to put maybe not 300 billion, but let's say 200 billion. Nowadays, it seems easy because everybody's talking about AI, but on the timing, they will need it. If it's something happened like in 2000, where everybody was eager to invest in 2000 in tech stock, in 2001, 2002, nobody wanted to hear about it. So if we have a scenario kind of similar, and nobody wants to invest in OpenAI because it's private investor, it's not the public and so on, it's private investor, it will be difficult to have those 300 billion to pay for Oracle, or at least to pay them in less than 5 years or 10 years. Maybe they will pay it, but on a lifetime on 20 years. And if they pay it on 20 years, it's not the same deal than investors seems to like and to want for the company. So this is something to take into consideration. Third thing is, I understand that the business model is kind of different for Oracle, that they don't own the land, they don't own the building, they just own the server inside, and they just put their own servers, they just create the machinery and so on inside. I'm just a bit perplexed with them able to fulfill this demand, because we have Google, Amazon, Microsoft that are spending tens of billions in capex for this. So yes, they have a business model that they own everything. But it seems difficult for me that those companies, none of them that have a problem of too much demand for what they can offer, that none of them thought about doing the same models than Oracle and to do then the transition. I know that doing a transition with the data center and so on is very difficult. Like it's a very difficult thing, but it seems strange to me that all of them accept to potentially lose market share just to be sure that they own everything and so on. So I just find it strange that they have this trouble. Oracle doesn't have this struggle. Oracle seems to find every spot and so on easily. So it's just a bit of a gray zone for me. Not saying that Oracle didn't do something amazing, because maybe they will do something amazing. And last thing, because of the business model, they will not have 37% operating margin on this like Amazon have, or 20% like Azure or Google Cloud have. They will probably be more around, if they manage to be very good, potentially between 10 and 15. And if they are less good, between 5 and 10. So now I think Oracle is around 20 or 25% operating margin. I don't remember, but they have this operating margin. So let's say the operating margin got divided by 2. If the revenue growth is multiplied by 3 in the same time, okay, you gain some EPS, so you should make some gain on the company, because over long run, like price follow EPS. But if the EPS doesn't grow because the margin are getting too little, you can grow by 10 times if you want, but at the end of the day, if your margin are divided by 10 times, you don't move. So that's also another concern that I could have about the company. But all of this is theoretical. I didn't deep dive enough in the company to say it's sure it will arrive. And also you need to consider the valuation now of Oracle. That's not sure it's a good idea to invest at this kind of valuation.
What's the valuation for Oracle right now?
I think it's around the PE of 60. I know it decreased a little lately, but I think it's PE of 70, 71.
Okay. People expect a lot of this
So
company.
yeah, like there is a lot of expectation. I mean, obviously you have a lot of expectation when you show this kind of backlog.
Oh yeah.
But yeah, I think it's something to take into consideration, and very nice for people that invested before knowing those backlog.
Yeah.
Also very nice to people that invested when a few years ago, Oracle was a PE at 19. So all the people that invested when the PE was 19, congratulations to them, because they did a very good performance. But I think it's not now that you should question yourself, should I invest in Oracle or no? It was like when the PE was at 20, 19, here it was the moment to potentially do something.
Fun fact, Berkshire Hathaway started the position in Oracle, I think in 2018, 2019, for 1 quarter, 2 quarters, and then they sold out. And Warren Buffett was asked, why did you sell? Are you trading? No, it's just that it was not really inside their circle of competence. So it was a tricky investment for the best investor in the world. So I understand how it can be tricky for all of us.
Yeah, and it's strange because the ratio of the company are not very good. Like when you compare to all the other tech company and competitors and so on, Oracle doesn't have great ratios when in terms of return on capital and so on. So I understand that it's more difficult. But yeah, in 2019, for example, the PE was 17, 2020, 17, 2021, 17. Even in 2021, the PE was 17.
That's low.
And now it's 70. So
it's, that's a big change. That's a big change.
Yeah, I think it never has been that high. If I'm not wrong, it's the highest PE that Oracle had ever had in this history.
Yeah, I mean, makes sense. If that's the biggest backlog they have ever had, it's that you have the biggest expectations that the company has ever had. Understandable. What you're saying is the headlines are huge, the backlog is huge, but so far we don't have enough information to judge whether this backlog is true or is it a little bit too much and will be diluted with time. Like
and also you have the change in the way the CEO talk, Before Oracle was way more discreet, and now suddenly they have like this CEO talks like Elon Musk, like NVIDIA CEO, what is his name, Jensen, something like this, Jensen Huang, something like this, I don't remember. Like suddenly they start talking like him, like them, visionary, a revolution, we're creating a revolution and so on. So this, for me, it's orange red flag, this kind of thing. So I prefer to stay out.
So will you short the position?
No. Like I can even the stocks that I will hate the most, I will not short it. Okay. Like it's too. It's not my competence to short. I'm not. What do we say? Yeah, I don't have the competence for this. Like I will not play like this. I think it was Warren Buffett who says this, or I don't remember who, but that the market can stay irrational longer than you stay solvable. So I will not play with this. I prefer to go long on the company I believe in, and that's fine for me. So I'm good with this. Will you short it, or do you plan to short some stock now on the market?
Absolutely not. Absolutely not. No. It's a mental game. The upside is not worth it at all. I mean, if you want to stocks the most loved stocks, if you want to short stocks right now, good luck. Good luck. The momentum is on. The retail investment is on. If you look at the overvalued stocks we have right now, I won't name names. You will get a lot of hate and a lot of pain because these stocks just don't go down. And as long as they are producing more growth, which they are doing right now, as long as they are improving, which they are doing right now, the upside is limited. The downside is immense. If a stock can double and and you will cry, so not the kind of stress you want in your life. No, I mean, if you are bearish on Oracle, you are short on Oracle. That means you want to bet against Larry Ellison. And I suppose a lot of people don't want to be against these kind of people. Same thing for Elon Musk. Same thing for Jeff Bezos. You don't want to bet against these geniuses. Whether you agree or not with them is very hard. Maybe they are lying a little bit. Maybe the numbers have to be adjusted, like we've seen for Masayoshi Son, like the Stargate investment we've had with Trump, etc., with the hundreds of billions of dollars that will come out of thin air. But still, you don't want to short them, to bet against these people. The momentum is on, as we say.
Yeah, plus there is all this narrative now around AI. And whereas I think we're just at the beginning of the narrative or in the middle of the narrative, we're still not at some, like valuation are pretty high, but they are not crazy high. It's expensive, but we have seen like in history market way more expensive, and especially here that we have growth. Like most of the driver of the market is not like company that drives the market up with just some hopes of growth. They actually have actual growth every quarter. It's good every quarter. There is some solid growth and guidance for the next quarter with solid growth. So I think we are still not at the top of the narrative of AI and everything, but yet you need to be very, very, very careful. And I will not play to short something with Larry Ellison. Plus, in the narrative of AI, I will not risk my money to short this.
Yeah. Some viewers may be tempted to ask, why is a big company growing so much while the Russell, the small caps are getting destroyed? I encourage you to watch what has happened during 2020, 2021. You had Google growing earnings like never before, Microsoft growing earnings like never before, and all the small caps getting destroyed. Scale had an advantage. They can play around with the number of employees, get more efficient. Right now, Amazon has not added more employees for years and still growing revenue double digits. You have a lot of efficiency when you're a big boy. You can tap into the debt. You can have a huge debt level, and that's fine. So yeah, this is not that crazy actually to have big companies delivering strong growth. As long as you have profitable growth, this should be fine. The big risk we had should be 2022, when everything slows down, when you have a shock in interest rates or any shock in tech, for example. That is the main risk we will have for these companies. Everything will slow down, actually.
Yeah, and it's also we have big, like for now, we're not impacted with all the CapEx that Amazon, Microsoft, and Google, even Meta spend. But for now, we cannot, for Microsoft, Google, and Amazon, it's a bit different because it's mostly data center. And we know the data center is super profitable. So it's kind of fine, but there is a lot of company investing massively on AI, and we don't know how AI will be profitable. Because maybe it will be super profitable and then amazing for them, but maybe we'll realize that it will not be profitable and we'll have company with return on capital invested like really, really decreasing because it's not that profitable. And the only way to be profitable was to invest in this specific part of AI. Maybe the companies that will profit the most from AI don't exist yet, or will just exist in 5 years, or we'll just discover them in 5 years. So yeah, it's a very interesting moment, let's say, to be in the investment.
Typical gold rush moment.
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.
Gold rush
Yeah.
moment. Everybody is rushing and nobody wants to stop. And there is one company you follow, which is Arista Networks, that is literally in this process of a gold rush, that is literally selling shovels. Also, Arista Networks is not a company we follow on this channel. Can you please make a pitch of the stock? I think I can share my screen during your pitch on Google Focus so I can show the audience the stats
Yeah.
when you are explaining what the company does and how they can benefit from this environment.
Which is kind of funny here, is because during the internet bubble, it was Cisco that was considered as the best company ever and so on. We all know how it ended. Now Arista is well positioned because of the switch that they have, the technologies that they have. It's basically Arista, the team, is people which was working at Cisco that didn't like what Cisco was doing. They say, oh, we can do better and we can innovate something and create something great. So they created Arista. The CEO is really good. If you look at Arista, I think since the company is public, they never had a quarter where they didn't beat the expectation. They always do better, and they always are very careful with the guidance that they give, and they do all the time better than the guidance.
It's crazy.
So it's an honest and well-managed company. They have great product. My story with Arista, and I started looking at it during the fall, in beginning of the year. I stupidly didn't buy around $60 because I was greedy. I was like, oh, it's just the beginning. I will be able to buy it 10-15% discount if I wait a little. Plus, a few weeks ago, I was impacted also by the fact that plenty of companies that I just bought lost 20% 2 days after or 3 days after. So I was like, I don't want to commit the same mistakes. I will be more patient and wait. Result, now it's $142. I could have bought it at $60. I had the money ready. I had everything ready. I didn't do it. So that's a good lesson for me for this year. Because it was a company that I really believed in. I really like the product. I really like the management. I really like what they're doing. They are basically enabling fast speed for all the data center, for all the AI things and so on, because they have a technology which is better. They also have a OS, an operating system that allow people to just connect things on it. So instead of, how do we say, instead of, what's the name of Cisco, where if you think start to be a bit too old, you need to change everything. With Arista, you can change parts little by little, so you're not impacted. They also have this kind of a dual memory thing that enable people like to do some update and so on. A developer from each company can create kind of some apps on their operating system to make it more productive for the company special needs. So they're really good with this. It's less wide market that they have than Cisco, but it's a market that have a lot of money, that spend a lot in capex, and that have something to really do. The company doesn't have debts. The company have incredible margins, like you can see, like operating margin 45%. As they don't have debts, they did buybacks during these times that the stock completely failed. They say, oh, let's start doing buybacks. So they did their first buybacks ever during this moment.
In April here.
Yep, 1 buybacks during the time when it was the lowest.
End of March. Oh, okay.
If you look at the graph of the company, it's during the V. It's a little V on the moment that they did the buyback. Like it's incredible.
Yeah. Okay.
Like they did the buybacks at the moment it was the lowest possible. So yeah, that's pretty old for this company. Now I still monitor it a bit, but the valuation is too high for me. But it was a good opportunity. They have incredible return on capital, as you can see. Like they have no debt. They literally have no debt. Like
It's
I think the
crazy.
debt is
Zero.
Like it's so profitable now. Also, they're entering into the cybersecurity because they're like, okay, we give the internet access, the data, and so on. Let's put some let's also do some cybersecurity with all of this. We have the clients, so we can integrate this. So no, they're smart. I recommend you to listen to some interview of I don't know how to pronounce her name. It's Jerry Ulal, the CEO.
The CEO? Okay.
She's doing very well. She's doing well. She have nice interviews. They have a nice vision. They are very, like, how do you say, humble. They really like humble. They're not like, it's not a company saying like, we will revolutionize everything, here's the future and so on. It's more like, we're creating great products. Our clients are very happy. And we want to continue to have our client happy and to create even better product. And it's like this that it continues. And the numbers just show they're doing it right.
It's great when you have the management team that is just repeating the same sentence, better products. We want customers to be happy. And they do this for 20 years in a row. Like the vision has not changed. And you see the numbers that are getting better and better every year. It shows consistency.
Yeah, and I think the CEO and the founder still have some shares in the company.
Good.
Which is a significant part of it. Like they don't have 10%, but I think like the CEO have 2%, something like this. And some co-founders still have like few percent as well. So it's like you have, in my opinion, you kind of have all the green flag for a company. All what an investor would be looking in, you kind of have it in this company. Obviously, there is a harsh competition. Like they're not alone on the market, but obviously, the fact that there is big capex spending now can advantage the company. But if all this capex stop, it's not. We don't know where it will go. So that's why they're trying to open on a new market segment like campuses and so on. But yet, it's managed well. So I'm kind of looking forward for the next down run for this company. But it seems that I missed my shot. I will need to wait a few years to have a new one.
Who are the competitors? GoalFocus indicates Dell as a competitor. Do they operate in the same markets or is this something else?
No, it's a different thing. Main competitors, they have Cisco. They have, let me find it. I don't remember the name because it's been a long time. I analyzed it. Give me a second. I'm checking my document. And they have Cisco, they have Huawei. Huawei, but Huawei with all those deals and so on, they cannot be in US or Europe. So, but Huawei is a serious competitor. It's what blocks the Asian market, for example, because Huawei have very serious product. You have Juniper.
Oh yes.
But Juniper might be bought by HP. HP might acquire Juniper. I don't know if it's a done deal now, but you have Juniper Network. And lastly, you have NVIDIA that now started to be in the same business, started to do something pretty similar.
Oh, that's
so
quite
you have
bad.
NVIDIA. And to be honest, NVIDIA is now, from what they have, NVIDIA is the biggest threat.
I mean, you don't want to compete against them.
Yep. So NVIDIA is the biggest threat. But they have, again, like different type of product. Also something that was, I would not say problematic, but can be a bit crazy, is 20% of the revenue come from Microsoft, 15% come from Meta for Anet.
Oh, okay.
So you have 35% of the revenue coming from two companies. They're aware of this, but this is something as well that can be, now it's nice because they both spend so much on CapEx that's free money, let's say, for Arista. But when they reduce the CapEx to focus on value creation for shareholders, like if there is a world when they need to lower CapEx to be able to give nice value for shareholders, this can be problematic for Arista.
I mean, so this risk would mean Meta and Microsoft, everybody needs to lower the CapEx guidance, which means the gold rush needs to stop. If you think the gold rush is going to continue and the data center build-outs will continue, so this risk is low. NVIDIA risk could be a little bit stronger, maybe. Yeah, I mean, the CapEx ramp-up is just accelerating. Everybody is just upgrading their guidances. We've seen...
So for now, everything is going well for them. But again, I'm looking forward to a moment where people will top this. because when it was at $60, $70, people were saying that there is no way Microsoft and Meta will spend more in capex, and yet we see where we are now.
That was the worry. Like, and we also had DeepSeek, so efficiency, AI being efficient in China. Maybe we don't need to build as many data centers, build out the burning billions and billions of dollars. So maybe we can be more efficient. This was the narrative back then, a couple of months ago, not even 1 year ago.
It was the tariffs. It was a moment also with the tariffs and so on. So
Yeah,
kind of everything was going down in the market. So this was the narrative. So yeah, I think it's a great company. I still believe this is just now too expensive.
too expensive. You have another company, same thing in a data center build-out story called Vertiv.
Yesterday I was doing a class with my my students, the people that are in my program, and somebody started talking about Vertiv.
It's a pretty good company. We don't have a lot of information so far, but it's pretty good. It's pretty good actually. And
yeah, it seemed pretty fairly valued. We did a little valuation model on it, and it seemed pretty fairly valued now. But of course, it depends what you expect in terms of growth and what they can do. So you need to study the business for this. But yeah, it seemed nice.
And you had the recent news with the Amazon and that wants to work in the same industry, but so when Amazon started doing this and the headline was released, the stock dropped. And then people started to learn what was Amazon doing, and apparently it will be complementary. So Amazon and Vertiv are kind of working together. And if you look at the stock prices, it absolutely follows Arista Networks of dropping big because of the DeepSeek moment, tariff, efficiency. And now, guess what? We will need more data centers in the future. The stock has been on a run. And so far, I mean, they recently upgraded their guidance. So far, it's going good. We don't have a lot of track record, but so far, so good. It's a
it's a nice company. I put it in my watch list of companies that I need to monitor. But yeah, it seemed promising. Then it is just a question: how long will this capex frenzy will continue as data center? At which point we have enough? This is, let's say, the big question for this market.
Yeah. So if you didn't buy Vertiv, if you didn't buy Arista Networks, did you, I mean, now that the markets are at all-time highs, did you buy some specific things that you want to share with the audience, things that you have bought recently?
During the big panic of the tariffs and so on, when I could buy Arista Network, I bought Lam Research instead. But it performed well. I think now it's 70% up since this moment. Less than what Arista Network did, but I will not complain. I'm happy with this buy. Lately, I bought two companies. I bought after the earnings a bit of Fortinet because it dropped by 25%. I don't remember how much exactly it dropped, but I opened a small position on Fortinet around $76, $77. Not a big position because my fair value for Fortinet is under $70.
Under
around 60, 65. So if the company go under $70, I think I will open a bigger position to potentially make it around 8-10% of my portfolio because it's a great company. Like they have shown since years and years that they know how to make a shareholder happy. So, and I like the fact as well that, as you can see on the graph, you had plenty of moments where you had super nice opportunity to invest in Fortinet.
Oh yes.
So I believe that we might have another opportunity. I don't know when it will arrive, but I think it might arrive. And I bought some Landbridge as well. A few days ago, I think yesterday or 2 days ago, I bought a bit more in Landbridge, around $51, $50 or $52.
Fair enough. The stock is not moving now.
Yeah, and now Landbridge now represents 6% of my portfolio. I think it's good. I have a little more cash eventually that I could put in Landbridge if the stock go down. But if it doesn't go down, I'm fine with 6% of the position. And to be honest, I have also a position in Landbridge in a waiting, let's say, for TPL to be at a better price. Because if TPL become at a very good price, very good valuation, I might trim a bit of Landbridge to put it in TPL.
It will happen eventually. You have such a strong correlation between the two of them. If they
Yeah.
continue to drop, they will drop the two of them. So you will be able to make this shift. Either you make money or you shift to TPL. I mean, either scenarios are great.
Yeah. So that's the plan for this. What about you? Did you do any transaction lately?
I'm sorry?
Did you do any transaction lately? Did you buy any
Oh,
any
I
stock?
just bought Fortinet. I'm very
Fortinet?
happy with the buy. And the
Yeah.
more I do, the deeper I go, the more I like the business. I've been studying the business for some years. And actually, I'm really enjoying the fact that they are going to ramp up buybacks. Very, very smart capital allocation. As you rightly said, management knows how to please shareholders, how to make shareholders happy. And I like being pleased like this. So we have 20 years of experience, 25 years of experience from the management team, founder led, founder oriented, and they don't do stupid things, which is great. They don't dilute shareholders, which is great. They take advantage of the volatility to do some serious buybacks. And as the price got lower, exactly when we bought, actually, when the price got down minus 25%, they increased the buyback. And now it's the biggest buyback ever in 1 quarter than they will do, if my formula is correct. And this is great. Actually, I can show you something else, which is on FinChat. I have created this valuation custom metric on Fiscal AI. Normally, you are able to see. Can you see it?
Yeah, I see your screen.
Okay. So Fortinet is a company in the cybersecurity industry. And as you saw on Guru Focus, it's net cash. Not all cybersecurity companies are net cash. So if you account for the valuation, do you measure the PE ratio, price to free cash flow? Well, for this industry, it's better to look at the free cash flow, look at the cash flows rather than the earnings, because you have like revenue, multi-year contracts like backlog integrated with the cash flows, etc. So free cash flow is a better indication. And instead of looking at the price to free cash flow, let's look at the EV to free cash flow. So you take into account the cash. I mean, that's how you say in French, un atout, which is like a real advantage you can have to be net cash. So let's take into account the balance sheet into the valuation. Something else that you can adjust is the capex ramp up that you can compare to just actually Fortinet increased their capex quite recently to build their own infrastructure. This is a very recent move, and the capex is getting higher. This is also the reason why the stock dropped 25% in one day. And maybe this is temporary, maybe not. Nobody knows. So let's just adjust for a little bit this capex, and let's just focus on operating cash flows, like people do on Amazon. Actually, how do you know if Amazon is cheap? Well, you compare for the core business, not the free cash flow, but the operational cash flow. So the core business, how cheap is it? Whether if you don't take into account the future potential capex ramp up, and if you do this, you have this EV to free cash flow line. What I did is I adjusted for the SBC. So that's that's 3 adjustments, because in the cybersecurity industry, you have a little bit of everything, right? You have companies that love their shareholders. So minimal bonuses for the management teams, minimal stock options like Fortinet. And you have companies that, I would not say hate their shareholders, but instead of loving the shareholders, they love their houses, the management, the CEO's new house, the new villa, the new yacht they will buy. So plenty of bonuses. They love incentives to salesmen. So stock options everywhere, here and there. And this has an impact on the free cash flow, obviously, operating cash flow, obviously. So if you adjust for everything, the cash balance, the capex, and the SBC, here is your chart. Here is your chart. This is the valuation if you really want to look at the core operations of Fortinet. So, I mean, it's equivalent of a PE ratio, but weirdly adjusted. And if I toggle the average line, it's at 30. If I toggle the median line, median is at 28. And now this line is at 26. Every time you could have bought Fortinet below this average and median, it was great. They were great buying opportunities, actually. And if you think Fortinet moat is still here, if you think the growth is going to continue at 10, 12, 15% per year, actually the valuation is not that high. So we all want the share price to drop. So you can build the position. We want to drop below $70, $65 to reach fair value. But actually, if you look at the core operations of the business, if you take into account everything and the cash, actually this valuation of 26, 27, you only had a few instances with the similar valuation. June 2024, November 2023, so the lowest valuations point you could get, January 2023, and then 2021, it was because of a big earnings report. So let's say 2020. A few instances. So I love it. I love it. And now we just learned a few days ago that they are doing more buybacks because they see this. The management sees this. They see that the stock is cheap. I love it, actually. This is what I bought recently.
What size of the position?
It should be about 5% right now.
5%, okay.
In the
So
fund.
do you plan to open a more? Why did you don't open a biggest
Why?
position?
Why? To be honest, I don't know what to sell. I don't know. Don't know
Okay.
what to sell.
Oh, yeah, you don't have cash available, so
Zero
you don't
cash.
have like everything is already invested. So yeah.
Everything is invested, so I have to sell something. What do I sell? Do you sell Google? That now Google is having this large momentum and it is going back to a fair value? Not so sure. The business is still great. Do you
And it's not
trim?
overvalued. Like it's not like it's crazy overvalued. It's
Yeah.
I think the P is not even 30 yet.
So
Google.
it's fairly valued. It's not overvalued at all. It's not cheap now. It's fairly valued. Do I want to hold Google, which is fairly valued? Yes. What's next? Do you sell Meta? Not sure. Same thing. Same arguments are true. I'm a strong believer in Meta platforms. Do you sell Amazon? Well, that's one of the laggards from the Magnificent Seven. It has definitely legs. And as the AI ramp up is coming, robotics ramp up is coming, efficiency is coming, I don't want to trim this. Do you trim MasterCard? I mean, the portfolio is filled with this kind of opportunities. So maybe, do you sell Lam Research? That's a tricky question. And every day I'm struggling with the demons, what to sell to buy more Fortinet. And we'll see. That's a very good problem to have, actually, to have a portfolio that is such high quality companies that you know every one of them will do well in the future, that you don't know what to sell. Is the best problem to have, and I love it.
Yeah. Like it's good. So I guess like for what you said now, if you have some cash arriving, if you have cash to invest, you should put it in Fortinet, or you think you will you have something else in your, how do we say? Do you look for something else if you have some cash available that arrive on your portfolio, or Fortinet seem to be in good position to receive this cash?
Fortinet is top one.
Yeah.
So everybody has the same information. And you have another stock. Let me share my screen again. Another stock that I've been following for many years. Games Workshop, the Warhammer for 40K. That is not having a great 2025. Let's put it this way. We are in a struggling stock and the fundamentals are great. So Games Workshop is high on the list. I would say Fortinet is number one, but this stock has dropped a little bit, and they keep raising their guidance again and again and again. It's a small company in the UK. They have a few factories in the UK. They have hardcore fans, customers that will pay up very expensive toy soldiers. Margins are sky high. Revenue is sky high. Net income is sky high. They don't have a debt problem. They have a lot of efficiency. And because this is a company here in the European category, half of the profits are distributed to dividends, which I don't like at all. But this has always been the philosophy of the company. Just pay half of the profits as dividends. They don't do much buybacks, which is a shame. But so far, this is one of the things I wished for. This is one of the reasons I also prefer Fortinet, because they love shareholders and buybacks. They understand this. But Games Workshop is a lovely company, actually.
Yeah, in the UK, I got recommended one of my followers we're talking about Gamma Communication, which is a pretty good company in the UK. I didn't invest in it because for me, I have trouble yet with the moat of this company. The moat doesn't seem to be very, very, very strong, but it's companies that perform super well till 2021, something like this. They have like good, they kind of have good numbers as well. And now I think they just started to do buybacks. They never did it as a UK company. I think they were doing mostly dividends or something like this. And I think they start doing buybacks or little buybacks like this year or last year, something like this.
Okay.
Oh, yeah, I think, yeah, this year maybe.
Yep.
Yeah, like right now. They started to do big buybacks. So yeah, this one can be interesting, but it's same. It's, it's on my, in terms of financials, it's right at my limit.
Yeah.
Like it's between my limit and good, because my limits are pretty high. Let's say I'm looking for all the time 15% return on invested capital, 15% operating margin, and so on. And they are right at the limit between 14 and 16. It depends sometimes. So that's why I didn't open a position yet. And also the moat of the company, I'm not sure. Like considering what they do, they have Microsoft as a competitor. And even if they're in the UK and now they have a solid position in the UK and in Germany as well, I think. Like Microsoft at the end have way more power to gain the market than them. So I am not a big fan of companies that need to compete with Microsoft.
Yeah, but I mean, that's a very good way to die.
So yeah, this one is, if some of you which are listening to us want to deep dive into it, it's they're pretty nice. They're on my watch list. I started studying them like a few weeks ago. There is things that I like. Main thing I don't like is the fact that they compete with Microsoft, and the fact that the numbers are good, but they are not like exceptional. They are very good, but
Decent.
Yep.
Still growing. If any one of the audience wants to do the research and send me what they have done by mail, I more than welcome the ideas, and I will forward to you, Guillaume, the idea. They did some buybacks, and actually now they are dried. Apparently, they used all their cash.
And they use debt.
Yeah, so now the buyback will not continue, I suppose, if they don't have any cash.
No. Yeah, like for this year, I think it's done.
Okay.
But potentially for next years, and they got this contract with the UK that changed the law, so they need to change all the cable telephones, the telephones that are on cable. They change everything to have something on cloud, something like this. And Gamma got the contract. Gamma got most of the contract to change all of this because they had this product. So that's why you have a, let's say, little acceleration of revenue this year, last year, this year, and potentially next year. But it's, I'm not saying it will not be sustainable, but don't expect that the growth that we have like for the last few years be this one. I think it will decrease a little.
Okay. Oh, a little help from the government. Fair enough.
Yep.
Okay. Do you have any other niche stocks that may be interesting to the audience? Some stocks that don't have a lot of coverage, but that are very interesting.
Yeah, one is Shelly Group, Shelly Holding. I don't remember the name. Shelly.
Yep.
I think it's just Shelly maybe. It's a Bulgarian company, Hungarian, something like this.
Shelly Group.
Maybe they will have it on Fiscal AI.
Shelly, yeah. Let me find it.
It's a Bulgarian company that they do a piece that you have in all the washing machine, the dishwasher, and so on. And it seems that they are kind of one of the only one doing this piece. So they kind of have a monopoly of washing machine. And they are performing super well this year. I think they're up 50% since the beginning of the year. But yet valuation is a bit high, especially the valuation is high for a European company and also high for a Bulgarian company.
Bulgarian company.
Like now the P is around 40, I think, if I'm not wrong.
Yeah.
The forward P is still at 21, which is not too bad, let's say. But same for a company in Bulgaria, I would potentially be more willing to pay around 15 as a PE.
Yeah, nobody knows the PE ratio for the Bulgarian stock market. Maybe the PE ratio on average is 8, so this is extremely high. You have a discount for some countries. Who knows 10 companies from Bulgaria if you're not from this
Yeah.
country?
Like, to be honest, it's the only one I know, because I found it on a little Twitter account, X account,
Yeah.
that started sharing about Shelly, commenting every report, every documentation that Shelly was showing. And yeah, it's this is how I discovered the company. I didn't open a position on it, but it seemed a nice company. I keep it in my watch list. I will probably deep dive a bit more into it in case one day we have a big panic in Bulgaria and the company go down a lot. But yeah, could be pretty interesting.
Fair enough.
What about you? Do you have some little niche company like this that you're looking at?
Do you know that there is a company that is operating toll gates in Dubai?
Oh, I think I saw an article about it yesterday
Oh.
or 2 days ago. I saw something, a thread or something like this about this company.
Yeah, it's called
I didn't know
Salik.
it before.
You want to know the TPL of Dubai?
Oh yeah, let's go.
I did a deep dive on this one. It's great. It's overvalued right now. I wouldn't buy right now, but I will monitor it and wait for years for a good price. Basically, you have 8, now 10 toll gates in Dubai that are operated by the government. And a couple of years ago, the government said, okay, why not raise international money, international capital, and get access to the public for this company, raise money, and all the profits from Salik will go to the government as dividends. So it's a good way to attract international money and finance our own country. Fair enough.
Right.
So they have unlocked like, I don't know, 20% of the company that you can see here, and the government still owns 80% of the company. So the government owns everything. They have all the rights. You don't have any rights as a shareholder, first of all. So don't expect anything to change. And so far, the company is doing well. They have added the new toll gates from 8 to 10. And how do you make money? What are the growth engines? Well, if you have more cars on the road, a toll gate will make more money. So if you look at the past revenue of this company, you don't have a lot of growth in revenue. Revenue dropped in 2020 because of fewer cars, obviously. And you have something that is growing 10% per year, fairly enough, 10% per year. In overall, you can forecast that the traffic will grow roughly 5% per year. If you look at the population of Dubai, it's up and to the right. Is the kind of stocks we want to have, up and to the right. And now you have what? 3 million people in Dubai, a little bit more, and you have plans of doubling the number of people living in Dubai. So more infrastructure, more roads, more cars. You buying Salik is buying Dubai. You bet on more people living in Dubai. And guess what they do with this money they get? Let me first say that they have 75% gross margins. Like they have to concede 20% of the revenue to the government because they are partners after all. And then you have small costs because of toll gates when you have a concession, etc. The net margin is still 50%. So we're in the same vibe as a TPL, a land bridge, this kind of MSCI, like toll roads, exactly this kind of efficient, lean business models. So 50% net margins. All the cash flows are given as dividends to shareholders, shareholders being the government. So they have a payout ratio of 100%. It's not like the UK and 50%. Now it's 100%. They will never do buybacks. They will never make a stupid acquisition. They will just be a cash cow that will give dividends to the government. And the government is very happy receiving the 3% dividend yield. Now it's 3% because the stock has run up so much. But in the past, like last year, it was not long ago actually, last year, you had a dividend yield of 6%. So you have a company that has an infinite moat. I mean, nobody can touch this, and it is backed by the government. I don't think the government wants to destroy its own cash cow. So it's a business that can grow if you have more cars on the road, like 5% more cars. You can grow revenue by 5 or 6% per year.
And you can also make the price higher of the tolls. You can open new tolls.
Yeah, you can open new tolls. Actually, if you look at the chronology of the company, in the past they had 3, then 5, 6, 8, 10. They don't know. when the new tolls will come. But you can guess that in the next 20 years, you will have more tolls, toll gates, obviously.
Yeah.
I have read all the transcripts, all the earnings calls, all the earnings reports, etc., etc. Like deep dive on this one. They don't have any plans of adding new tolls in the near future, say 1 or 2 years. So this is not this. And actually, for the price, this is a very good point you raise. Since the creation of this company, when it was not public, when it was private, since 2007, so it's been 15 years, almost 20 years, no price increases. So yeah, that's strange. Yeah, this is not a company in the US. And if you had the price, that's 4 dirhams, equivalent of $1. $1 to go through the toll gate. From a French perspective, it's excessively cheap, but the frequency is higher. So anyway, for the first time ever, this year, actually in 2025, they changed their pricing policy from being flat 4 dirham, so $1 every time you go through. And now they have a dynamic pricing, which means in rush hours. So when people go to work, like 4 hours time frame in the morning from 8 to noon, and then late at 9, rush hours, rush traffic, it goes from 4 dirhams to 6 dirhams. So they have increased prices by 50%. And then at night, after midnight, it's free. So you have a dynamic pricing, and apparently this is also the reason why the revenue has gone up massively in 2025. So more gates, more pricing power, a new change, and more traffic. So 2025 is a very good year for them. And this is the reason why the stock is up from a 1 year perspective. It's up 60%. So huge gains. Now the question is, will they change again the pricing again? You have rumors so far, but the track record is very poor on this one, which means the company has not increased prices for 20 years. It's not in their DNA to play around with the traffic. This is the first time ever they changed the pricing policy. And if you look at the competitors in this area, in other cities, nobody is increasing their prices. So I see this as an investment in Dubai, actually. If you believe in Dubai, if you wait for a good valuation, now the forward P ratio is 27 for something that can yield 10% per year, like 6% revenue growth, 4% dividend yield, a little bit too high. It's something that can generate high.
Also, the fact that it's in UAE, it's not an area same where it's not America where you have a P of 30 for a great company and you find it kind of normal.
Yeah.
Like paying this kind of multiple for a company in the UAE might be a bit.
It's high.
A bit high.
It's high. The P ratio, the average P ratio is, not above 20. It's in the 15. It can change depending on what you look at, but it's not high. So Salik is expensive. But this is maybe the best company you have in this market. You have other companies that are operating the parking industry, like when you park your car, like you share this. But Salik is the best in this.
No, it's pretty interesting, especially with the dividend, I guess, as well. In UAE, you don't have a tax on dividend, or it's probably lower than the American one, which is 30%. On the dividend, maybe here like there is 0 or something like 10%, 15, I don't know. So for somebody which is looking for dividend in a company, that might be something interesting to get.
Yeah,
not at 2.9% dividend yield, but when it's around 5 or 6, it can be nice.
Yeah, the dividend yield was much higher. I mean, well, for the tax, we almost have no tax in this country, which is great. Share this tab instead. Can I show you? I mean, from the government perspective, from the company perspective, before they had 0%. Now all the profits above 100K are like taxed at 9%. So let's say you have a tax of approximately 8 to 9%. Very low compared to the US, and I don't talk about Europe, obviously. So from a company's perspective, low tax, and from a Dubai investor's perspective, very efficient. So, I mean, if I had to bet on a Dubai investment, growing city that will develop beautifully over the next 30 years, I would invest in only one company, and that is Salik. This is a company with a huge moat, helped by the government, and this is a bet on the country, literally a bet on this city. Sorry, the dividend yield was 4%. Dividend yield was 3-4%. This is like a bond, a big bond investment in Dubai.
Yeah, no, it's nice, especially that when you get it at 4%, you almost double also your money with the share price. So no, it's an interesting one. It's an interesting one. I don't know if I will be able to trust a government like this, but it's an interesting one. After like the story have shown that government of Dubai manage well their money. Like they created one of the most profitable airline company, which is Emirates, which is something pretty difficult to do.
Yep.
They did amazing with Emirates. They did great as well with the promoters in Dubai. So yeah, it can be something. It can be something interesting, especially tolls doesn't cost a lot of money to build. It's
and
like,
actually, what is crazy is Salik doesn't build the toll gates. The government is the one who pays. Salik has to pay.
so Salik is just operating it.
Yes, the maintenance cost. So almost zero cost. They just, if something breaks down, you have the fee, the tags for cars. They have an app. You can update your subscription if you are an inhabitant of Dubai. But this is the government who has the capex. Actually, I mean, you own Landbridge, right?
Yep.
I will maybe make a video on YouTube about this. Salik is very similar to Landbridge, which means Salik will benefit from not having any capex because the government will pay the capex. Landbridge will benefit from not having any capex. Waterbridge will pay the capex. So very similar situations actually. So very asset light, very, very asset light.
Yeah. No, it's an interesting business. I will have a look at it. Maybe if the price drop massively, if we have a 50% drop or 60% drop because people think Dubai is dead, that might be a nice moment to open a position.
Yeah, I don't know if I mean the real estate market in Dubai is changing, but I don't know.
It started apparently like a few months ago or a year ago to decrease a little, but it seems that it didn't last. Like, it's continue to grow. I still like it's same. The rents are continuing to grow apparently. So yeah, the market in Dubai is pretty solid.
Pretty strong. Even if you look at the stock market, the index of Dubai, up and to the right, it follows like the S&P 500, and the Salik follows the equivalent of the S&P 500, like the Dubai index. You follow it. You have a lot of correlation, I would say. So as long as the business is fine in Dubai, Salik will not drop, unfortunately for us. Unfortunately for us.
For now, no, we need to have this panic. When there will be a panic in Dubai, I guess here you will start to have Salik having some trouble and the stock might go down. It might be the moment where maybe the government will say, okay, let's do buybacks. But not.
Good luck.
Yeah, very not sure that it will happen, but we never know, you know?
You never know. If you look at the earnings calls, they are very happy with the dividends and they say, we have no plans of changing our capital allocation policies. We are fine with the 100% dividend payout ratio. We will do zero capex, zero acquisition. We just don't mind at all paying all these big dividends.
But as we say, unexpected buybacks count double.
Oh yes, imagine, yeah. I mean, for Games Workshop, if one day they cut the dividends and they say, you know what, all this cash we had for dividends, now the stock is cheap, we are doing massive buybacks. This will be a buy for me, an absolute buy in the ranking.
Yeah, but same. Like it's difficult. I find it very difficult for a company and a management that have been doing dividend for years and years and years to change it, to stop growing the dividend, to stop paying it, to do buybacks, even if it's the smart things to do. It seems that the dividend is trapping some companies. That a lot of companies got trapped in this dividend and they do everything to maintain the dividend. And sometimes it's just not the smart things to do for the company at the moment.
It's because we are French. We are French. We have this French vision of loving dividends. Companies.
But it's the worst thing. If you look at the history of dividends, United States is the best country. If you want to invest for dividends, there is no better country than United States. For example, in France, you don't have any king dividend. I think you don't even have one company that grew dividend every year for 50 years. While France love dividend, you don't have this. Like have some company maybe that grew it for 20 years. And again, I'm not sure we can count it, like we can count it with our fingers, I think. We don't have a lot. Maybe some very niche small cap company, maybe they manage to have a better history. But every time that there is a problem or the market is less good, they cut the dividend or they reduce it. So they don't have this history of growing dividend every year for a long time.
It's crazy.
There is always a year or two where it go down, where it doesn't grow, always. I think LVMH is one of the only that managed to continue to grow. Total, they reduced the dividend in 2020, or they cut it. I don't remember exactly what they did, or they didn't make it higher. The next year, they did an exceptional dividend to cover this, but the fact is, during 1 year, they cut the growth rate. You have also AXA, that was known for dividends, same. Not very reliable for it. And it's strange. French love dividend, but apparently they don't love to invest in real dividend company.
Like the best ones.
Like you will not have a lot of French, let's say, investing in reality income, which is a 5 or 6% dividend yield every month. No, you will not have many. They prefer to invest in Total. They prefer to invest in French companies that give a dividend, but not even good track record for dividends.
It's very strange. Okay, last question for you. You talked about dividends. Many, I would say, many people, retail investors, are seeing the markets at all-time highs and saying maybe we have to play defense. Maybe you have to rotate out of from I don't know, the tech companies to go to dividends investments. Any advice for those people asking this question? Like maybe markets are hot right now. Should I go defense in this market environment?
Like first of all, like even defensive companies are not cheap now. Like I don't know for what you research and everything. Yes, they're cheaper than Nvidia. When your comparison is Nvidia, I'm sorry, but everything is cheaper. When your comparison is Palantir or Tesla, yeah, everything is cheaper. It's not difficult to do cheaper, but defensive company are not that cheap. Like I don't know. You take for example, one of the most famous defensive company would be what, Procter & Gamble.
PepsiCo, yeah, did not cheap.
Procter & Gamble, like it's a PE of 24, 25, which is obviously less than other company, but as a comparison, Procter & Gamble is a PE of 25. Now Google is a PE of 27. So you have you can choose between a company with a PE of 25 and growing at 4 or 5% per year, or a company growing at 15% per year with a PE of 27.
Yeah, sure.
You can go to the PE of 27. Other defensive company, you will have PepsiCo that became pretty cheap now. But so it could be something interesting, but it's not like what is the PE for PepsiCo? It's 25 still a PE of 25. So it's not that cheap. I'm sorry, but 25 for me is not cheap. It would be cheap if it was like 13. PE of 13, I was like, yeah, maybe it can be a good timing to change. Maybe it can be a good timing to go to some defensive stock because it was the case in 2021. In 2021, companies which were in, I don't remember what's the name of this. It's, the companies that give water, gas to, so they basically have monopoly in cities or in states, and they distribute gas, water, utilities. A utilities company, they were super cheap in 2021. Like you were paying them at a PE of 10, 15, I think.
Yeah.
And it's companies that you could have with 6% dividend yield on it that had a dividend for 50 years. And it's same, it's a business that you can have a monopoly because as the moment that you have a city, like you will not change the electricity or the water or the gas provider every year. Like you have one and that's all. So those companies perform very well when the market is not good. When the market is good, like now, they tend to underperform and not doing well. But if you want to protect yourself, I think those kind of company can have something good. But even now, in 2021, they were cheap. Even now, they're not that cheap because they progress well. Like, so now it's there is not a lot of very cheap thing on the market. Like even defensive company are not that cheap. Procter & Gamble is 25, Pepsi is 25. I guess Coca-Cola is potentially the same, around 25. Coca-Cola is 23, 24.
Same.
You have McDonald's. which is what McDonald's is 26. So same, like every time that you want to invest in a company like this because you find it defensive, just compare to Google.
Yeah.
And now you have the choice of buying McDonald's at 26 or Google at 27. Like, come on. Okay, I'm not sure we need to debate this very long.
Yeah. Yeah, it's not as if the defensive plays were excessively cheap, so you can expect a rotation in value and a re-rating.
Yep.
The gap is not that wide, actually.
Yeah.
And if you go into value, small cap value, you will get crushed because they are getting crushed day after day, and they will suffer from inflation like they always did.
No,
So
like the only thing is if you find companies that have a P under 15 and have great number, obviously, like not a company that is a bad number, like company with great numbers and a P under 15, this might be something cheap enough to protect you.
You mean Crocs?
Crocs is under 15 now or around under 20?
It's well, we have a forward ratio of 7, price to free cash
Oh.
flow of 6. It's excessively cheap. But, Crocs is about a hype. The company was not growing for years and years and years. And then since COVID, it was hype to wear Crocs shoes. So now they are printing cash. So it's very recent. They made an acquisition that was Heydu that was pretty bad, but still they are generating strong cash flows. And you have a price to free cash flow of what, 5 or 6 now? Yeah, I mean, I would say if you don't want to touch into defensive names, you have special situations like Crocs. If you want to not touch tech, not touch defensive plays, arbitrage plays, special situations could work like Crocs.
Yeah, Crocs seems to be pretty nice. For me, it's a bit difficult to invest in this kind of company, which are selling shoes, which are selling apparels and so on. It's a bit tricky, but yeah, why not? Crocs can be, like here you have an example of a company that might be cheap. Like if forward P of 7, like this is literally cheap, especially if the company have great numbers, great margins, a great return on capital. Yeah, like Crocs might be cheap, yeah.
Yeah,
are they doing buybacks as well?
They are doing buybacks almost every quarter.
Yeah, so
they had a write-off of a bad acquisition here, so please don't mind the net loss they had. It's because they made an acquisition and they said, no, it was not a good acquisition, a big write-off. But the business is fine. The business is fine. Yeah, actually, this is cheap, and you have a super investor. Who is it? Norbert Lou, that invested in Crocs. Let me double check on Google Focus.
It's funny. This guy finally decided to buy something else than Berkshire Hathaway.
Yeah. PayPal and Crocs. So
and Pinduoduo with his friend Lilou.
Yeah, exactly. So we all respect Norbert Lou. We maybe want to copy what he's doing, and he is only investing in specific plays where you have a high probability of winning. Crocs is one of them, apparently.
Yeah, PayPal is pretty cheap as well.
Oh, yeah.
PayPal
is left for dead.
But I hate this company. Like I hate PayPal. Like, no, I hate it as a customer. As somebody using daily PayPal, I hate them. So I cannot see myself investing in them. But when you look at the numbers and so on, I think they are pretty cheap. Yeah.
And PayPal is a very difficult situation. People are loving PayPal right now. It's not growing that much, but growing a little bit, and they are doing buyback. The moat is getting eroded by the day, so management is doing everything they can to bring back the growth, users. It will be kind of difficult, but we'll see in the next 5 years. We'll see how it goes.
We'll see. Yeah, it's funny. Everybody on Twitter call it PayPal.
Yeah, it's a very hard stock.
Make me laugh every time I see it. Yeah.
Okay, anyway, it's been what, 1 hour, a little bit more than this, less than this. Do you have any specific things you want to cover, or can we call it today?
I think we can be good. Oh yeah, maybe a little thing. I don't know if you saw it coming. I know that you don't really like this company and this, but I think it's still interesting. It's Tesla. Elon Musk buying 1 billion shares of Tesla.
I am.
Did you have a look at it? What are your thoughts on this kind of transaction? And also another one, what do you think about this Trump wanting to go on a semester instead of quarterly for the results.
Oh, okay. Well, the first, I mean, you can't not see Tesla. I've been monitoring Tesla since I started the stock market, so a couple of years ago. And this is not the first time we have some crazy headlines. You had a big pay package for Elon Musk if they reach high goals, which is normal. And apparently he's buying the biggest insider buy ever. Okay, fair enough.
Yeah.
It's 1 billion, which means it's nothing for him. It would be quite interesting to see the insider buying in percentage of the net worth, because maybe there is a CFO, COO that has done a huge insider buy considered to his net worth, but on a dollars term is not that big. So I would love to see this chart. I don't mind. It's okay. I mean, you can do some tricky accounting things if you play by these rules. And this is also the reason why Elon Musk had so many problems in 2018 with the SEC manipulating the share prices. They say, okay, at $400, we go private. And then 2 days later, no, just kidding. I mean, literally a literal manipulation of the stock price. So yes, I've seen it. And I have no comments, and I will not short it, not buy it. We'll just enjoy the show with some popcorn. Do you want to do something? Do you want to short the position as an arbitrage?
No, I don't want to touch. I just have a little theory on it. Because since the beginning of the year, like Elon Musk was very involved politically and so on. And I kind of have the feelings that he bought some shares to higher his position on the board, and to potentially have more voting rights, and to, be less threatened to be kicked out of the company. Because this happened already, I think, in Tesla, that Elon Musk was kicked out as a CEO. So I think it's just to gain a bit more control and power over the company that he did this, to allow him to, continue with all this ecosystem that he seemed that he wanted to build with X, with Starlink and Tesla. So I don't know. That's my theory. I think he thought that now it's a good price to do this. It might not be like lower for a long time, so maybe this. That's just my theory on it. It's potentially full bullshit. I don't know. I will let you decide here. I'm not I will let the audience decide, but yeah, that's my theory on it.
Everything is possible. I mean, you only have one guy that can do what Musk is doing to Tesla. You only have one guy. So please give him all the power and let him run. You had only one guy that can bring Tesla to a $10 trillion valuation. I don't know in how many years. If there is one guy that can do it, it's him. So yes, pay him with a huge package, big incentives, because apparently, as you say, he was in political spheres a couple of months ago. So maybe his focus was not there. And you want him to be 100% there. You want him to be focused on the company. So as a shareholder, I would love this. Give him half of the company for free if you want, because the remaining half would be handsomely rich. You only have one guy. You can't replace him. It will be horrible.
You just need to have Elon Musk at the top of the company, and then in the media having Cathy Wood saying it will be a $10 trillion company.
Perfect.
You need this combo if you want to get the 2021 vibe again.
That's a great idea. The great idea. You're pumping the stock like never before. They will create an ETF. They will call the Bored Ape NFT. It will be a great vibe. Love this long-term mindset. This is great.
Yeah.
A second question you had about quarterly versus semi-annually reports from companies. Well, this is not the first time Trump asked for this. He already asked for semi-annual reports in 2018. Nothing has changed. The industry will kind of change if we, instead of reporting every quarter, we report twice per year. Auditing companies, reporting companies will make less money, obviously, and it will give the management team more opportunity to, one, be honest and flexible and do more buybacks and not focus on short-term results, but also lie to shareholders, manipulate data behind the scenes. In the past, like 20 years ago, 30 years ago, we didn't have so much information. So Wall Street was privileged. Literally, companies called Wall Street analysts before earnings calls, before earnings reports, telling them insider information. Like, okay, we're going to miss now. Okay, like it was not a level playing field, the same for everybody. Now with the information we have on the internet, we have this luxury of playing with the same field. We have almost the same information as people on Wall Street, which is great, and almost everything is for free, which is great. Um, I would not like to have a semi-annual reports. I think, I mean, in the past we had monthly reports. You look, even now, Costco has not changed it. Costco
Yeah.
is still using monthly data, so you have monthly sales for Costco, and you have a few other companies, retailers in the US that are doing this. That has not really changed that much. So you can play around with the quarterly, monthly, semi-annually. You can remove the guidance. It would be very hard to change this industry.
I
Very,
don't
very.
know. It's strange. I'm not a big fan of it. I like the quarterly way because I find it giving like a lot of transparency.
Yeah.
And also, if there is a problem one quarter, like you literally don't wait 6 months or a year to see how this problem will be treated and how it goes with this problem and so on. So it's kind of like the 6 month thing kind of feels that, I don't know, in my opinion, like this, if the US market works so well compared to all other markets in the world, is because of this transparency. Is because at the end of the day, compared to other countries, you have way less scam in the US, financial scam in the US than others. For example, China, like you never know if the numbers are real or not. They do it on 6 months basis. And the argument that, yeah, but if you look at China, they think over 100 years, 500 years, us in America, we don't. But I think the biggest trend in America is kind of that America never dies. In the sense that every time that we thought America was done, they reborn. And they managed to continue growing. They managed to continue being here. So I just think like, yeah, you should, I feel like since few days, like years, Trump is kind of starting to admire China a lot. And I'm not sure this is a good thing in the sense that, yeah, China is potentially amazing. China is great. They have this long-term vision, but I'm not sure that the vision that United States have for their company now doesn't work. Like the proof is the biggest company in the world as in the US. So it's kind of seems that it worked what they were doing. They will not be there if it didn't work.
Yeah. Trump admiring China, giving them hefty tariffs.
Yeah.
Yeah. Another thing about Trump is now that he's here, we recently learned about the Google antitrust issue that was resolved to the extent that Google won everything. Now that we have Trump as a president, you have China that is rising. It's much less likely that you have big companies that are broken into several parts, like Google or meta platforms. I mean, Trump has always wanted big boys, big American companies, big, strong, beautiful American companies to compete with the big, beautiful companies in China. So I don't see them deteriorating at all. Actually, over the next 3 years, with this new US administration, it's very likely that the Magnificent Seven gets even more magnificent. More power to them, more tax cuts to them, more efficiency to them. You will have more wealth gap in the US, inflation, interest rates, blah, blah, blah. I see them growing a lot. I mean, we can have a $5 trillion market cap very soon. We'll get 6, we'll get 7, we'll get 8. Very soon, actually.
Especially with the growth rate that they have. If they manage to continue this growth rate, like there is no, I don't see a way where it will not happen. Especially like Amazon can literally be in almost every business. Like it's like you cannot live in the US without using an Amazon product at some point. Like it's almost impossible because either if you're on the web page is probably at AWS. If you go to buy food, potentially you go in what was the name of this food chain that they acquired like a few years ago? Yeah, Whole Food. You potentially buy your food in Whole Food, or if you order online, maybe you order on Amazon as a food because now they do food delivery. Now pharmacy and telehealth, Amazon is doing it. Prime Video, Prime Music, they're everywhere. Like it's crazy.
Yeah, and they will continue to grow into all the other market segments.
Yep.
It is great. It's very good. You are a shareholder, right? We are both shareholders of Amazon.
Yeah, for me, Amazon is my biggest position in my portfolio.
Google and Amazon, two big
Yeah.
parts of the portfolio.
Yeah. Both is like 40% of my portfolio.
That's huge. That's
So,
huge.
yeah.
That's conviction here. See the audience. Sometimes I make videos about concentration versus diversification. That's concentration. When you know what you're doing, Guillaume is a great example. He has done the research. He knows what he's doing. So big position.
Yeah, for now, let's say we'll see in 5 years. We'll see in 5 years how it pays, because for now it's working. So it's easy, to say, oh, I'm a genius, it's working, like my strategy is the best. We need to see in 5 or 10 years how it will do. But I'm definitely happy on this. I had like a 20% position on Google. I bought it at $150. So I'm kind of happy of what I have now. Same Amazon. Amazon less because it grew less than Google and so on. The share price grew less, but we'll see now. Google passed in front of Amazon in terms of size in my portfolio thanks to the P&L, but I think Amazon will take its position back soon.
Everybody's waiting for the stock to go up, actually. We are out of the Magnificent Seven. Everybody's waiting for Amazon. Everybody's up there. The Magnificent Seven is outperforming everybody right now. But you just have one laggard, Amazon, and they just need a little bit of momentum to finish the year beautifully. So it will be, the next 3 years are very bullish.
They just need a CEO starting to talk about the revolution and the future, which I doubt it will arrive anytime soon, because it doesn't seem that Andrew Jassy is like this. But I don't know, maybe one day we'll wake up with a nice buyback.
That's for another topic. You had memes for the latest earnings call of Amazon saying people went asleep when the CEO was talking or CFO was talking, because of the long answers that were boring, not sexy at all, not exciting at all, about the vision of the futuristic AI. It was like grounded, how do you say it? Simple, I would say not simple, complex, normal.
Yeah, it's just techniques. It's just like, we're developing our product, it's going well. We see some improvement in the workforce and so on thanks to this. Thank you. Next question.
Yeah, nothing
and
exciting.
It's like we did this little ship now that is 30% more efficient because we did this to make it. Obviously, nobody understands what you're saying, but good.
Yeah, we'll see how it goes. Okay, thanks, Guillaume, for coming. Great chat, as always.
Christophe.
Please like this video, comment on this video so Guillaume can come back. And thanks for coming. And see you around.
Thank you for the invitation. See you, Christophe.
Bye-bye.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.